Welcome to Investero. Investing in stocks is one of the smartest ways to build long-term wealth. But if you're just starting out, it can feel overwhelming. So the first thing to understand is what a stock actually is. When you buy a stock, you're purchasing a small piece of ownership in a company. If the company performs well, the value of your shares can increase. And in some cases, you'll also receive dividends, which are payments of the company's profits shared with shareholders. The journey begins with opening a brokerage account. In 2025, this process is simple and fully online. Brokers like Robinhood, Fidelity, Charles Schwab, Webull, and Interactive Brokers all provide easy platforms where you can deposit money and start trading. Choose a broker with low fees, a user-friendly interface, and educational resources if you're new. Once your account is open and linked to your bank, you're ready to fund it and begin investing. Before buying any stocks, it's important to decide on your investment style. Long-term investors usually focus on strong companies with steady earnings, a proven track record, and good growth prospects. This strategy means holding stocks for years or even decades, allowing your money to compound over time. Short-term traders, on the other hand, try to take advantage of daily or weekly price swings. While trading can offer quick profits, it carries higher risks, especially for beginners. When researching what to buy, start with companies you already know and understand. Look at their financial performance, leadership, products, and how they compete in their industry. Reading earnings reports, analyst ratings, and industry news can help you make informed choices. Blue-chip stocks like Apple, Microsoft, or Coca-Cola are often safer for beginners because they're stable and have a history of growth. When you're ready to make a purchase, you'll need to choose how to place your order. A market order buys the stock at the current market price instantly, while a limit order lets you set the price you're willing to pay, and the purchase only happens if the stock hits that price. Beginners often use market orders for simplicity, but limit orders can be a smart way to avoid overpaying during price swings. Diversification is one of the golden rules of investing. Instead of putting all your money into one stock, spread it across different industries, or even consider exchange-traded funds, also known as ETFs. ETFs allow you to own a basket of stocks in one investment, reducing your risk if one company doesn't perform well. Risk management is just as important as picking the right stocks. Never invest money you can't afford to lose. Avoid chasing hype or hot tips, and don't let emotions drive your decisions. The market will always have ups and downs, but staying patient and disciplined usually pays off in the long run. A simple strategy for beginners is dollar-cost averaging, where you invest a fixed amount regularly, no matter what the stock price is. Over time, this helps smooth out the impact of market volatility and builds consistency. The key to successful stock investing is patience, education, and consistency. Don't expect to get rich overnight. Focus on learning how companies work, staying informed about the market, and steadily building your portfolio. By starting small, diversifying, and thinking long-term, you can grow your wealth and move closer to financial independence. Subscribe to Investero.